Good morning. It's Thursday. Wow. Things are developing fast, aren't they? Credit Suisse dumping again. Credit Suisse share price has been collapsing for quite a long time. This is a real car crash in slow motion for Credit Suisse. How they're going to save the bank, I really don't know. A lot going on. So it seems like there are quite a number of banks that could be in. I haven't read all the details, but it's incredible how bond yields have collapsed. And we're now even looking at rate cuts this year when inflation is definitely holding around 6%. PPI was fractionally lower yesterday in the US, but retail sales were quite strong. We know that employment is strong. People have jobs, people have money, people are spending. So the inflation problem hasn't gone away just because there is a banking crisis. Never seen the Fed in such a difficult position. They've got to stop the banking system collapsing while fighting inflation at the same time. I can't imagine a more difficult scenario for the Federal Reserve. And clearly that is spreading because Credit Suisse is under pressure. We have to wonder whether other European banks will be in trouble. How are they going to get out of this? I really don't know. Cut rates, borrowing's going to go through the roof, spending's going to go through the roof, inflation's going to go through the roof. Don't cut interest rates, banks are going to fail. I just can't see how this doesn't end horrifically. But then the Fed has put us in this position. Zero interest rates for far too long, QE for far too long. Created a huge bubble. I've been saying this for such a long time. This does not end well. We'll see. This is a fast changing situation, changing day by day, almost hour to hour. Look at how the euro collapsed yesterday. Hundreds of pips wiped off the value of the euro in just a few hours. You can't trade without a stop loss. We'll talk about that in a minute. But be very careful. These are times where you can make a fortune if you are lucky and you get on the right side of something, but you can wipe out your account real quickly at these times. And actually at these times, I really don't like trading myself. I trade when I have an edge, when I understand what's going on and I can put on a low risk trade. I don't trade when I'm just punting around and hoping that something works. You decide if you want to trade, but really this isn't the market for me. Okay. Let's have a look at some markets. Actually, trading went quite well yesterday for us, didn't it? Oil broke out of this consolidation pattern and collapsed. Now, if you were looking at this, you'd be thinking, right, oil is in a bear trend. We had a consolidation here. We've broken all the moving averages. We've broken out of this wedge pattern, triangle, whatever you want to call it. Bang, down we go. So that played out as you would have expected once we broke down. But if you don't look at longer term charts, you could be missing something extremely important. You could be looking at the daily chart and be thinking, I need to hold a short in oil after the breakdown of the pattern here. When you look at it on the weekly chart, you realize, well, actually oil's in a bull trend. We have a correction to the 38.2% fib, which is around $65.25. We've got the 200-week moving average, the 500-week moving average. All of this support area around the December low in 2021. You can see we've got some decent support from some swing lows and some swing highs. We've got Fibonacci and moving average support on the weekly chart. And we've probably achieved the target of breaking out of this consolidation pattern anyway. So you have to think that this could be a really good buying opportunity in oil at around the $65.50 to $64.50 area. So commodities have actually worked quite well for us this week. Gold was a beauty. We had a buy level yesterday at 1893, 1890, stop below 1885. I like to keep my stops tight, as you know. We rocketed up to my ultimate target of 1935. Now, if you ran that all the way up, of course, you're looking at probably a $40 profit. Huge when you're only risking 5, 6, 7 points on the stop loss. That risk reward certainly works. Even if you only ran it up to the second target, something like that, you've still had a great day trading gold. You only really needed to do that one trade the whole week, and you would have had a great week. You can see we've got good support around sort of the 1910, 1900 area in gold now if we dip, and then we've got some good support around sort of 1890. I'm going to call it 1895, 1890 if we do continue lower. But for now, gold is benefiting from safe haven status. The dollar started to benefit from that status yesterday as Credit Suisse starts to implode. Silver, I had a buy level around 2150, 2140. We got to within a couple of ticks of that support level and then shot up. But silver isn't looking as bullish as gold. Silver can't quite keep up with gold. Someone asked me yesterday whether gold and silver trade closely, and they really don't. So if you're looking for safe haven status, or you think that the banking crisis is going to continue to worsen, you probably want to be long gold or even the dollar rather than silver. So the euro collapsed as the dollar soared yesterday. I can't make much out of this euro chart. I really can't identify levels where I would put a trade on. You can see we've got this sort of megaphone or broadening wedge pattern with support in the low 105 area, resistance in the high 107 area. But in between there, I really wouldn't know what to do. The ECB, they're supposed to raise interest rates by 0.5% today. That's what's expected. Maybe they will. And depending on what rhetoric they come out with, maybe the euro could soar back up there. I really don't know. A break below 105.00, therefore, should be negative for the euro. But personally, I wouldn't be risking a euro position today with everything that's going on with the banking crisis and then an ECB meeting on top of that. On that note, the one thing I really focus on my education is using a stop loss. You must use a stop loss. Some people disagree, but this is a perfect reason why you absolutely must never trade without a stop loss order in place. Otherwise, you've no idea how much loss you could take. If you'd gone away for a bit of lunch and you were long euro yen, you came back 3 hours later, you were down hundreds of pips. You absolutely have to have a stop loss order in because you just don't know what's around the corner. My understanding is it is triggered just by the latest fall in the share price of Credit Suisse, which has been going down for months. So, you just don't know what's around the corner at the moment. These are very dangerous times. So we did well in gold. We also did well in the Aussie dollar. We had resistance around the 67.00, 67.20 area. We also had resistance in the New Zealand dollar, which worked. And so if you were shorting those, we were helped by that stronger dollar. What else do I want to talk about? CAD, the big support level, we bounced off there yesterday. We also bounced off the support level in the Aussie yen. So those trade ideas are going quite well. Okay, if you're a subscriber, you've already had today's trade ideas analysis to set you up for the day. Remember, we've got index futures expiry, so I'm actually going to stay away from the indices until the beginning of next week. They are quite difficult to read already with the events developing so fast. And when you combine the rollover, the levels are a little bit muddied. So we're going to leave them alone. That's it. I will try and do another video for you tomorrow. I'm sure we'll have plenty to talk about. Good luck if you are trading today. Watch out for the ECB interest rate move and the comments from the ECB afterwards.